Hey everybody, welcome back to another edition of Stock Market Saturday. I am your host Marco with WhiteBoard Finance. Thank you so much for joining me. Let's get right into it, you guys. We are getting crushed. I hate to start off these live streams on a negative note, but let's take a look at some of the stocks out here that we've been doing for the past week. Here is the overall S&P 500 over the past week. Let me check if you guys can see this. It looks like you can. Everything seems to be in the red. I know Twitter was up just a little bit by 5%, actually more than a little bit, but that seems to be the only winner here out of the past week. Microsoft down 5%, Apple down 6%, JP Morgan down 6%, Bank of America getting absolutely crushed, you guys, down 9.3%. What do you think is going to happen here moving forward? My gut feeling is that the market is definitely going to be sideways going through quarter 1 and 2 and potentially going into a correction or a recession later in 2019. I'm not trying to be a negative Nancy, but we've had a great run here. I just honestly think that's what's going to happen overall. So let's see if anybody's joining us. I just want to check the chat. We got T-Fox saying, howdy, folks. Hey, Marco, good to see you. Nice seeing you, T-Fox. I don't recognize your name on here, but thank you for joining us. I really appreciate it. Frankie Roberson, greetings. How you doing, Frankie? Nice to meet you. Doug Whitaker, how you doing, my friend? Good afternoon. Flora Wu, good morning. Nice to see you again, Flora. Thanks for joining. Aravind Kumar, my friend from I want to say Western Asia. Is that a fair description? Not sure exactly where you're from, but nice to see you here again. William Powell, good morning, my friend. Thank you for joining us. We got about 16 people watching. Usually these live streams get up to about 40, 50, 60 people. And I didn't live stream last week just because it was my wife's birthday and I wanted to take her out. We went hiking. We went out to a nice lunch. We went out on the town. It was really fun. And my wife is actually a triplet, so we celebrated her 2 other brothers' birthdays as well. So last weekend was fun. This weekend, my birthday is on Monday, December 10th. So if you guys want to send me anything, no, I'm just kidding. My birthday actually is on Monday. So we're going to a really nice dinner tonight. It's one of the nicer restaurants in downtown Cleveland. It's gonna cost a pretty penny, but we definitely budgeted for it, and it should be a really good time. So let's go back to the shared screen here. As you guys can see, everything was pretty much in a bloodbath last week. I know that some of the insurance companies, they did okay. If you want to take a look at those down in this area right here. These are also some financial REITs, believe it or not. So Simon Property Group up 2%. REG is Regis. They rent out office space. Public storage. Public storage typically tends to be recession proof. If you guys want to take a look at some REITs for the upcoming year or so, I think now is a decent time to buy public storage. They're on an upswing slightly if you look at that little chart, but I think that is definitely a stock to own through any recessions or pullbacks. The reason for that is typically because when people are let's just say someone's building a home, losing a home, whether the economy is good or bad, people still need a place to store their crap. And public storage is typically, fitting the bill. Same thing with like U-Haul and a lot of those mom and pop self-storage properties. They sometimes look like dumps, but a lot of those are gold mines that those people are sitting on. My old boss that I used to work for when I worked in commercial real estate said that storage facilities are chicken shit businesses. That's exactly what he called them. But this is a guy that owns a helicopter and is flying around, landing on office buildings. But from my perspective, a lot of office buildings got crushed in the downturn, and a lot of public storage facilities, storage facilities did not get crushed. It's kind of like a recession-proof business, almost like a bond, if you will. So the reason I pulled this up is I wanted to talk a little bit about the contribution limits for 2018 and 2019 for your 401k and Roth IRA. If you guys follow me on Instagram, which I suggest you do, I just posted yesterday that I actually set up my automatic payment for $6,000 for my Roth IRA. So let's find that. This actually, you can see right here, it went from $5,500 in 2018, and over the past 5, 6, 7 years, as long as I can remember, it's been $5,500 per year maximum. It's now been raised to $6,000 in 2019. So I scheduled my $6,000 contribution on January 1st. I had that $6,000 in the bank, and I just said, screw it. I'm not going to contribute every month and try and dollar cost average. I'm just going to take that chunk out, throw it in a target fund, set it and forget it. So I also wanted to talk about some of the benefits of maxing out your Roth IRA. So here's a real life example. If you guys have never been to bankrate.com, oh, I'm sorry, you guys. I realized I wasn't sharing my screen this whole time. I'm so sorry. You guys were probably just looking at me, staring at my face. Sorry about that, you guys. So just to recap very quickly, the Roth IRA contribution limit went from $5,500, as long as I can remember, as long as I've been contributing, to $6,000 in 2019. So very quickly, I just wanted to show you this calculator, which just shows you the power of compound interest. So let's say, for example, you're brand new, you just got a job right out of high school, or you got a job straight out of college, you're in your late teens, early 20s, and you're starting to make some money, right? So let's say you get out of college, you're making 40, 50, 60 grand a year, you're graduating into a good economy, which I did not. I graduated December of 2010 when unemployment was almost 10%. I ended up selling cars outside of college. I'm bilingual and I have a finance degree. I sold cars for a year. That's how crappy the economy was. So you guys graduating now, be grateful that you're graduating into a good economy. I digress. Let me get back to my original point. So if your starting balance is $0, okay, and you're maxing it out, right? We just discussed that it would be $6,000 for 2019. So right here, Bankrate hasn't updated it. They're still on $5,500. So just for the sake of this example, let's just say you're contributing $5,500 a year to your Roth IRA, and let's just say you're 22 years old. You just graduated college. You're either 21, 22, whatever. So let's say, for example, that you know that you're going to retire when you're 65. Hopefully I can retire sooner than that, but let's just say it's 65. Your expected rate of return, overall, all market conditions, some years they return 20%, some years they lose money. Overall, it's historically been right around 7 to 10% depending on your level of risk or your appetite of risk. So you can see here that if you're in the marginal tax rate of 25%, this tax rate doesn't affect your return. It just shows you how much you saved, because a Roth IRA is after tax dollars. So let's remember that, you guys. So let's run through this real quick. You start at zero. You're contributing $5,500 a year. So if I can pull up the calculator here, you guys, $5,500 a year divided by 12 months in a year, this is $458 a month. In the grand scheme of things, this is a decent chunk. This is a really nice car payment or whatever. But in the grand scheme of things, you guys, if you invest $458 every month for the rest of your life, this is what you're going to end up with in retirement. So it's almost $1.5 million by putting away a little bit every month, ultimately putting away $5,500 a year. This is what you get, $1.45 million at the age of 65. So just for argument's sake, let's say we want to retire a little bit earlier than that. Let's just say 60. You're still going to retire a millionaire, okay? Obviously, 40 years from now or 38 years from now from this example, is $1 million going to be worth what $1 million is worth now? Absolutely not. There's obviously inflation that eats away at this 3% a year. But at the end of the day, this is still a nice nest egg to supply you and your loved ones when you retire. So ultimately, the rule of thumb that you want to shoot for is whatever you want to live on per year. You guys can't see my calculator either. What the hell? Sorry, so this is not making a lot of sense to you guys. Maybe I can pull up an Excel spreadsheet or something. Crap. Sorry, I'm doing all this math in front of you guys, but it's not showing up on the live stream. So take my word for it. $5,500 a year divided by 12 months, that's $458 a month. Whatever your target goal that you want to retire on. So let's say you're going to live 25 years after retirement. Let's just say you live to be, just mid-80s. Let's call it mid-80s. Knock on wood, you live longer than that, whatever. So let's just take 25 years times whatever salary you want to live on. Let's say you want to pay yourself 65 grand a year, okay? You need to save $1.625 million, so $1,625,000 in retirement to theoretically or hypothetically pay yourself 65 grand a year for 25 years, okay? A lot of people aren't thinking this far ahead because right now they're young, they're in their 20s, they're thinking, oh man, I got life by the balls, you know what I mean, for lack of a better term. I'm happy, I'm healthy, my wife's healthy, my girlfriend's healthy, my fiance's healthy, whatever. But at the end of the day, guys, people get older. So when you look at that old person in the at your grocery store, I use Giant Eagle because that's what we have here in Cleveland. That person was once young, okay? They weren't just born 85 years old, okay? And they didn't just, they weren't born walking slow with gray hair, okay? People get old, life happens, so it's important that you plan for that, you guys. The last thing you want to be is a burden on your family. So let me check the chat down here, you guys. Let's see what's going on. Aravind, okay, Frankie Robertson, hi. Sridhar Putnuru, hi Marco, how you doing, Sridhar? Nice to see you, buddy. Frankie Robertson, hello. T Fox, I've been here a few times but still new. Thanks, buddy. I haven't seen your name, so sorry if I haven't recognized the name. Doug Whitaker, this red is going to continue and agree to in recession of summer 2019. That's definitely my gut feeling, to be honest with you. Frankie, happy belated birthday to the wifey. Thank you, my friend. I really appreciate it, man. Doug Whitaker, happy birthday. Happy birthday. Thank you, guys. I really appreciate it, man. I really appreciate it. I'm turning 31, believe it or not. I never thought I'd say that, but, such is life. Alberto, good morning from the West Coast. It's your birthday. How you doing, Alberto? Nice to see you, my friend. My birthday's on Monday, December 10th. T-Fox, I'm 36. I have to start thinking long term. Hey, in the grand scheme of things, buddy, 36 is not that old, man. So yeah, you're better late than never. Good thing that you're watching this channel. So what's new Roth amount for 55 plus? William Powell asks. That's a very good question, William. Let me pull that up. I think it's the same. So let me pull up my screen here. Okay, so William brings up a good point. If you're 50 and older, you can actually contribute more. That's how it used to be. So let's see what it is for the Roth IRA. Okay, so the income limit for contributing to maximum Roth IRA will go up by $2,000 for singles. Oh, this is talking about the income. Let's talk about the annual contribution. Okay, the age 50 catch-up limit is fixed by law at $1,000 in all years. So to answer your question, William, that means you can contribute $7,000 per year from 50 until whenever you stop contributing. So pretty interesting to know. I know that doesn't apply to a lot of my audience. A lot of people are younger, but that's definitely a good question, and thank you for asking. So let's go back down to the chat. Frankie says, I'm female, no offense to the wifey, she scored. Thank you, I appreciate it. I got the fresh lineup today. Nice little hard part. Got the beard lined up. Gotta look good for dinner. So you know how we do it in Cleveland. You gotta be fresh when you go out. Hey, even if you have to return the clothes to the store the next day with the tags tucked in. Joking. I don't do that. Maybe my wife does. No, I'm just playing. Happy birthday from Brooklyn. Brooklyn's in the house. How you doing? Nice to see you, Ade Singleton. So let's get back to it, everybody. So I wanted to bring that up just because the main point of this channel, the reason I started this channel, is to create financial literacy, and Americans are definitely not ready for retirement. It all comes down to behavior. Like Dave Ramsey says, personal finance is like 80-90% behavior, 10% math. It really isn't hard math. This is middle school math, you guys. You just got to be smart about it. So hypothetical situation, let's pretend you're older. Let's say you got let's say you start off with zero in your Roth IRA, okay, and you're contributing $5,500 a year. Let's say you're starting like William, I believe, said he was 36, or someone else said, oh no, I'm sorry, my bad, I'm all over the place. It was not William, it was T Fox. So T Fox said he's 36, okay. So let's pretend that hypothetically you didn't add $1 to this Roth IRA, and you start when you're 36. You can still retire at 60, or let's just call it 65. Let's say you're gonna work till 65 with $500,000 in the bank just by putting away $458 a month. That $458, you're only contributing $160,000, not even $159,500, and you're ending with $500,000 in the bank. So how about that for a return? That is the power of compound interest, you guys. So let's take a look at, let's say someone is 30 years old, and let's just say they got $50,000 in their Roth IRA. Okay, they've been maxing it out since whatever age. let's just say they're 30 years old and they're retiring at 65. Boom, you've contributed less than $200,000, but since you've been putting money in since whatever age, let's call it 20, you now are retiring with $1.3 million in the bank. And I'm not even talking about 401k or anything like that. I'm talking about just a Roth IRA. And the best thing about this, you guys, is that these are after-tax dollars. So if you see down here how it says taxable savings, 850 grand, if you're in the 25% tax rate or tax bracket, you would owe this much money. So that's how much you're saving when you actually go to take it out. So this cash is after-tax dollars. It's already been taxed, so they're not going to tax you on it again. So I just thought that was pretty important to talk about. So now let's get a little bit more into the stock market itself. I know that this is obviously the Saturday stock market talk, not the Saturday, personal finance talk, but I still think it's important to talk about these things. So as you can see here, everybody, what I want to make my next video on in this channel is actually talking about the Treasury yield curve. So it's called an inverted yield curve. So the title of this article is called Brace for a 15% Plunge in the S&P 500 next year if the Treasury yield curve fully inverts. So this was posted on December 4th. And I believe it already has. So essentially what an inverted yield curve is when it talks about different treasury yields becoming flat or starting to invert. So let me see if I can find an example here. Here we go. So essentially when the spread of yield, I know this is going to get very technical and it's probably better explained in my video rather than in live time. But essentially when short-term yields exceed their long-term counterparts, meaning like if a 2-year exceeds a 10-year yield, that's called an inverse curve, as you can see here. See how it's inverted right here? Let me see if you can see my screen. Okay, you can. Perfect. So a recession has usually followed when this happens. This actually happened, I believe, 9 times, and each time there's been a recession, this kind of predicated it. This happened before it. So this has actually happened, I believe, either on like Thursday or Friday of last week, a couple days ago. So you can see here that the 2-year note has matched or pushed above the 10-year note, and the S&P 500's returns over the next 2 years has turned negative. He expects S&P 500 to slump 15% in 2019. So let me know what you guys think about this. I'll check out the chat over here. Let's see here. Alberto says, happy birthday, pump it up, go to the party, make them kids. That's right, man. So yeah, my wife and I, we would love to have a family one day, so that's definitely in the plans. We're looking at a house right now, so that's why I've been so busy, you guys. I got my private stock market membership group, I got the channel, I got a full-time job. I'm just freaking... I'm crushing it, you guys. Like, I don't know if it's crushing me or if I'm crushing it, but something's getting crushed here. So let me actually make the screen big so you're not just staring at that article. So ultimately, we got Rewa Peck. Happy birthday. Sorry, late, just saying it. Just figured out how to chat. This is my first time watching live. How you doing, Rewa? I hope I'm pronouncing your name correctly. Dr. Pick, Robert Pick, how you doing, my friend? Yo, 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 how you doing? Frankie Robertson, LOL. T-Fox, not bad at all. There you go. See, I've made that example for you, buddy. You got 500 grand in the bank if you start today at 36 years old. And it's actually going to be more than that because I was using the example of $5,500 a year rather than $6,000. So Josh says, what's up? How you doing, Josh? Nice to see you. Dr. Pick says, compound interest is so important. Got a late start as my parents taught me zero, which is typical of baby boomers. Very true. Most baby boomers I know had to figure it out for themselves. So a lot of people bash on baby boomers. I understand that they're one of the most prosperous generations in world history, not just this country's history, but a lot of them have good work ethic. I know my parents, I guess they're technically baby boomers. They're Eastern European immigrants. My wife's parents are baby boomers. They're also Eastern European immigrants. You just see that work ethic, and you see people that, just figure it out on their own, and Dr. Pick is definitely one of them. So yeah, thank you for your comment. I made it up in volumes, but will never make up for what I lost in compound interest. That's absolutely correct. And you know what? That's so important, Dr. Pick. I'm actually going to show that calculator one more time and give you guys an example of someone who starts later rather than someone who starts earlier. So let's say two people start investing in their Roth IRA, right? Let's just say someone is 18 years old. They get a job right out of high school. They're making full-time income, whether it's an apprenticeship, whether they're a plumber, an electrician, whatever. They work at McDonald's. It doesn't matter. So you have an income and you're putting away $5,500. Actually, you know what? Just for the sake of this example, let's just say they put away a total of, actually then they can't be 18. Let's just say they're 23. They've been investing for the past 5 years. So they started when they were 18. They're currently 23, as you can see from the calculator here. And let's just say they put away 3 times 5. So $3,000 times 5 years. Let's say they put away 15 grand. Okay. By the time they're 65, and let's just say they don't put in another penny. Okay. So you have the starting balance of 15 grand, $0 in annual contribution, and they're 23 years old. If they just let that 15 grand sit from the time that they're 18 to 65, they have $250,000 in the bank. Is this resonating with you guys? That is the power of compound interest. Now let's just say for craps and giggles, okay, we have someone who put in $0. Their annual contribution, let's say they max it out at $5,500, and let's say they start at 40, okay? They've put in $137,000. Do you see that here? $137,000. They have 372 grand, okay? But they put in literally almost 10 times as much as the 18-year-old did when they were 18 to 23. As from 40 to 65, they put in $137,000 and only have like $100,000 more to show for it. Do you see how powerful compound interest is? So again, let's take that example. You put in 3 grand a year for 5 years. You don't put anything else back in, and you started when you were 18. So you're 23 now after 5 years. You're 65. Boom, 257 grand. So that's how important that is, you guys. Compound interest is how you make your money. You have to have a long, holistic view of the market. You can't just be in it, trying to triple up. If you want to do that, go to the casino. That's great. That's not my philosophy, but my portfolio speaks for itself, you guys. I think I'm up like 35% over the past 12 years of investing just because I got in at a low cost basis. I gradually, added a little bit more, once a month, whatever, and now it's grown to a nice chunk of change there. So let's take a look at the chat. Let's see if anyone else is chatting here. Dr. Pick says, please listen to him. Yeah, that's absolutely true. Okay, T-Fox, I'm listening. Guiletta's Garage, good afternoon, everyone. How you doing? Nice to see you, my friend. Abdul Khan, how you doing, buddy? So yeah, I hope that really resonates with you guys. So let me, I'm actually trying to shorten these live streams because they're taking up a big chunk of my weekend. By the time I plan them, by the time I, go for an hour, it's a lot of stress, you guys. So I'm going to shorten these up to maybe 30, 45 minutes, right around there. An hour is just a lot of content and a lot of information to keep doing it weekly. I love that you guys are on here, and I love that you're joining me. I really appreciate it. So let's share the screen again. I got a couple other things pulled up here that I wanted to talk about. Obviously, the market, is getting crushed, you guys. We dodged the bullet on Thursday, I believe. The Dow was down like 700 points, and it actually ultimately finished flat. But Friday, I knew this was going to happen, and I mentioned this on my daily email in my private membership group. We dodged the bullet, and then I knew Friday was going to be red. So you can see here that it closed down 550 points. I think my portfolio overall was down like 3%. It was insane, you guys, just on one day. So ultimately, we can see here that the Dow Jones fell 2.2%, S&P 500 fell 2.3%, and the NASDAQ fell 3%. Like, it was crazy, you guys. It was a bloodbath. And for the week, the Dow was down 4.5%. So I'm going to pause here just for a second, let the chat kind of catch up, because me live, this stream is actually delayed just a little bit. So I want to make sure everyone's on the same page with that. What do you guys think about this? What do you think quarter one is going to be like? What do you think 2019 is going to be like? I'm really interested to hear your guys' perspective on this. Anthony says, hello. How you doing, Anthony? When is your book release, Dr. Pick? Yeah, go check out Dr. Pick. He's great. He's been a big supporter of the channel, and he's a very sharp guy. I've spoken to him privately for I think it was a couple hours actually that one day, Bob. Kay Michelle, good morning, Marco. Do you think student debt plays a role in how much a person can contribute coming out of college? Most young people aren't thinking long term anymore. Bing, 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 bing. Winner, winner, chicken dinner. That is the $1 million question. Let me put it on my big fat face here. That is a very, very, very good perspective, Michelle. So Michelle, just to in case you guys are just joining us, he asked that, hey, do you think student loans are burdensome? People aren't thinking long term at all. They're just living kind of paycheck to paycheck. Absolutely. I would hate to see what this generation of kids are. They're graduating into a good economy. So let me stop myself there. So they're earning a decent amount out of college, but they also have tens, if not hundreds of thousands of dollars of student loans. So ultimately, you guys, that's a very good question, especially with millennials now, and then whatever the generation is younger than millennials. So I'm a millennial. I was born in December of '87. I'm kind of like in the middle, more towards, I think, the older side of the millennials. But ultimately, people want instant gratification. They want all the gadgets. They want to look good on social media. They want to, be flashy and create like a highlight reel of their life to make people think that their life is actually better or happier than it really is. Like, we're all human, dude. Like, we all have problems. If you have health, happiness, and time, and family and significant other and things like that, you're richer than 99% of the world, in my opinion. Money is just that's the cherry on top. Obviously, money makes life a lot easier and gives you more options, but I'm rambling. So at this point, to answer your question, Michelle, I think that with having to keep up with the Joneses, with the iPhones and the technology, and trying to eat out every meal because no one knows how to cook anymore, and driving nicer cars and leasing cars and putting a TV on payments and all this stuff, like there's not enough meat at the end of the month. There's more month at the end of your money. I'm screwing that up, but basically your money's running out sooner than the month is. You know what I'm saying? And you're living paycheck to paycheck. Me, what I do is I budget a certain amount goes into my Roth IRA every month. So I know for the next year, I'm going to be able to max it out January 1st, just like I'm doing. If you want proof of that, go on my Instagram, WhiteBoard Finance. You will absolutely see what I'm talking about. I sent $6,000 on January 1st, maxing out my Roth IRA. Boom, done for 2019. Don't even have to worry about it. I set aside money for a vacation. I set aside money for a house fund. I set aside money for a car fund. That way I always know, okay, can I afford the car? Yes or no? Can I afford the house or the furniture or the remodel or the TV or whatever? Yes or no? Like, I come from an old school Eastern European mentality. If I don't have money in the bank, I'm not buying it, period. Like, if whatever you see me driving, I own that car outright, period. I don't have payments on a car. I don't need to impress someone at a stoplight that's going to, see me for 10 seconds. I couldn't care less. I am a car guy. I would love to drive a nicer car than I drive right now. I have a 2011 BMW. It's a little 3 Series, you guys. Like, it's like a $15,000 car that I paid cash for. Ultimately, what I'm trying to get to is that, to answer your question, people are putting all the stuff that doesn't matter ahead of the stuff that does matter, okay? So, like, not having debt, maxing out your Roth IRA, putting away a little bit extra on your mortgage or whatever. Those are the things that take precedent over, hey, do I have the newest LeBrons? Or, hey, do I look fly as hell? This is a $10 shirt from Costco, okay? Like, it looks good in person, whatever. It's $10. I'm not cheap, don't get me wrong. We're going to, expensive dinner tonight. But at the end of the day, you gotta budget, you guys. You gotta budget and still enjoy life, but understand your wants and your needs. So that was a really long-winded rant, and I'll get off my soapbox now. So sorry for boring you guys with that, but I think it's important. MDM10 says, I am able to retire after 23 years on the job at the age of 48. Should I take my retirement and place it in a Roth IRA? Very good question. So my wife is in a similar position. My wife is a nurse. She works for a government hospital here in Cleveland, and ultimately they have what's called OPERS. It's the Ohio Pension. She's been working at that hospital since she was 18 years old, and she's 27 now. So she already has 9 years with this hospital at the age of 27, believe it or not. And she can retire same as you, early mid 40s if she wanted to. So I don't know what your job situation is, and I don't know how OPERS, my wife's pension plan, works. But ultimately, what you can do is, I think you have to keep the money in there. I don't know if you can take it out, so don't quote me on this. I'm not a financial advisor. But with you, if I was in your situation, if you're not able to take that money out and put it in a Roth, what I would do is I would just keep contributing to the pension or whatever retirement you have, since you've been at the job for 23 years. But I would start now, depending on, you said you're 48 years old, you can still put away, $6,000 a year in the Roth, and you'll still have a nice chunk of change by the time you retire. Because keep in mind, not only has the maximum contribution gone up to $6,000 in 2019 for the Roth IRA, at the age of 50, so in 2 years for you, you can actually start contributing $1,000 more on top of that. So you can put in $7,000. So do the math. If you put in $6,000 for 2 years, that's $12,000, and then you put in $7,000 for 10 years. Let's just say you want to retire at 60. That's 7 times 10. That's 70 plus 12. That's $82,000 plus all the growth that you're going to have. And that way you can, live a couple years off that, or whatever you want to do. But that's after-tax money, meaning that that's your money. That's straight cash in the bank. That's not going to be taxed, whether you're a multimillionaire in a high tax bracket or someone that's in a low tax bracket. It doesn't matter. So thanks for sticking with me, you guys. I know I'm kind of on my soapbox here, but we're at 30 minutes. I'm going to keep going because there's a lot of good questions coming in. Doug Whitaker says they're all drinking Pepto-Bismol on Wall Street right now. Yeah, I believe it, man. I just think that commercial lending is slowing down. I think that interest rates are going up. I mean, we know that interest rates are going up. There's the trade war with China. There's OPEC. I forgot exactly what they did with oil, so I don't want to talk out of line. But ultimately, there's a perfect storm brewing to where, the economy has been booming. All these earning reports have been great, but that's also fueled by a lot of credit and a lot of borrowing. It's a lot of money moving around and a lot of growth. But keep in mind, you guys, $2-3 trillion was pumped into the economy during the last recession. So let's see what we got here. Mr. Bacon, what do I think about Tesla? So a good question. Let's pull up a website I like to use when looking at certain stocks. So I'll pull up a website here called Tip Ranks. And let's see what analysts are saying about Tesla. So I know I'm rambling a lot, you guys, but I'm just pumped. I get excited about retirement because I want to be ready for it. I always have, 5, 10, 20, 30 years in advance when I'm thinking about big picture things. So, I hope to retire a lot sooner than, 65 or 60, but we'll see. So Tesla, a lot of people, they have it actually as a sell. 7 analysts have it as a hold. 9 have it as a buy. And you can see here that the average, right now Tesla is at $357, if you can see that up top. Analysts predict that it's actually going to go closer to the mid-300s, okay, with a 7% downside over the next 12 months. Some people have it going to 500, some people have it going to 200, and you can see all the different ratings here by the different analysts and when they updated them. So what do I think about Tesla? I mean, at one point, their balance sheet looked like Lehman Brothers in 2008. It looked like they were going to go bankrupt. So I don't own a Tesla. I don't drive a Tesla. They may have addressed, some of their production, issues. But ultimately, Tesla is one of those stocks where you can own it and it goes to $500 a share. You can own it, it goes to zero. I truly don't know, and I don't want to speak out of line. My gut feeling is that Elon Musk is a big BSer. Keep in mind, he's very glorified with millennials and social media and all that stuff, but he's a bullshitter, okay? Let's be honest. He's an entrepreneur. He's an owner of multiple companies. He always needs to put on the positive facade that any CEO would do, any salesman would do. Oh, we're doing great. We're going to crush it. Oh, numbers are through the roof. We're going to crush it. Yeah, until they don't. So keep that in mind. I know the stock is doing well, but I think a lot of that comes from social media. There's some institutional investors investing in Tesla, but in my opinion, it's a very risky stock. That's just my opinion. But, maybe I'm the, 80-year-old white guy who's very conservative. Who knows? I mean, that's just how I feel. So I hope that answers your question, Mr. Bacon. And I love your username, by the way. Reggae World, how much is the Dow now? I'm not sure exactly if I fully understand your question, but if you want to know what the Dow is at in terms of, let's see, Google Finance. Dow Jones is right here. Dow Jones is just under 25,000. It's at 24,388. So if you can all see my screen here, you can see that it went from, over the past 5 years, it's just exploded, you guys. We went from we've gained about 10,000 points at one point over here, actually more than that. And you can see how it's exploded since 2008. This was when I was in college. Its lowest point was right around 6,600, and just in 10 and a half years, so put that into perspective. I'm glad you asked that. We made almost like 450%, which is insane, you guys. So that just puts things into perspective. But you can see here back in the dot-com bubble, the crash right here wasn't nearly as bad as 07, 08. And then you can see here how it's just chugged forward all throughout the last 10 years. So these markets typically last 8 to 10 years, these bull markets do, and we're definitely overdue for a correction. That's my gut feeling, and I think a lot of people, have that in the air. They're putting that out there. So let's see what else we got in the chat here, you guys. So I know I said I keep this to about half an hour to 45 minutes. I'm having a blast. I don't know about you guys. I'm answering questions in the live chat. If you have some friends that don't know about my channel, please share the channel, you guys. Ever since I stopped posting, my views have hit rock bottom. I'm barely getting 1,000 views on my videos. I don't know what the hell is going on, to be honest with you. I think the algorithm still thinks that my channel is dead or something. Who knows? Ultimately, I like doing this. I'm not making much money off this. My ad revenue is not nearly anywhere near any of the big YouTubers. I'm lucky to make $100 or $200 a month, if that, and I'm putting in tons of hours in this channel. So I'll stop complaining at this point. But yeah, just share the channel if you can, you guys. It's a lot of work. So Rebel Peck, what are your thoughts on medical marijuana stocks? So it's funny, I was at the barber today. Check out the fresh cut, you know what I'm saying? I'm just kidding. I was at the barber today, and my barber was actually talking about, medical marijuana. It's legalized in Michigan recreationally. It's legalized medically in Ohio. Ohio is typically more conservative or more right-leaning of a state, and for it to get legalized here just shows you what the ultimate trend is going to be. So the industry itself it's going to boom. It's going to be great. I think a lot more people are going a more holistic medicinal route or medical route rather than going through the pills or, alcohol, self-medicating, things like that. I just think that demand is not only – actually, demand is outpacing supply, if that makes sense, in a lot of the different cases. So there's going to be a ton of demand once the United States completely legalizes it, and that'll be over the next decade for sure. So medical marijuana, I'm definitely long on it, definitely bullish on it. It's here to stay. So William Powell, is it smart to do Roth conversion from 401k to Roth? I'm just not that into it, to be honest. So I may not be the best resource for this. To me, that's just more headache. I think that if you already set a plan, just keep going with it. If you already have money going into your 401k, just do it. If your company offers a Roth 401k, meaning after-tax dollars going into the 401k, you can do that too, because typically your tax bracket when you're young is going to be different than your tax bracket when you're old, okay? So meaning that you're going to make more money when you're older, you're going to be in a different tax bracket when you're older. Putting in after-tax dollars into your 401k and a Roth 401k will actually save you some money with that tax difference, if that makes sense. By when you have a face like Calvin Klein, you can pull off a $10 shirt. Thank you. Yeah, it's the Eastern European high cheekbones. I'm telling you, man. Okay, thank you, Frankie. I appreciate the compliment. Wow, impressive with wifey's work ethic. Thank you. My wife is beautiful, Eastern European, hardworking woman with a big heart. I got very lucky, to be honest. Thank you, Frankie. I really appreciate it. I wish you the best as well. Michael Clark, did the limit on contributions to Roths when go up because cost of living is going up? That's a very astute observation. I'm sure that's one of the different factors. I think that inflation and just everything going up, interest rates, cost of living, the middle class is kind of getting crushed. Right? The middle class is getting squeezed. And the reason I say that is because ultimately the price of everything is going up, and also the standard of living is going up to where instead of just having a TV and cable, now you have kids running around with freaking iPads, iPhones, this, that. It's like the standard of living just to be considered middle class is going up, and you have that lifestyle creep. Okay, meaning that you got to keep up with the Joneses, the neighbors. It's like, it's freaking annoying, man. So ultimately, I think that the middle class is getting crushed. I think that inflation is hurting people. So the government is giving you the option to put more into retirement. That way you can actually retire with a stable income or a livable wage when you retire. So good observation, Michael. Anthony says, hi, what do you do for a living? How you doing, Anthony? Nice to meet you, my friend. So my career summed up in a nutshell has mostly been sales, but ultimately I've been in car sales, I've been in technology sales, I've been in finance. I've worked in an aspect of finance and numbers my whole career pretty much. Right now I work for a big regional bank here in the Cleveland area. I am a credit analyst. So I'm a middle market analyst. What I do is we have businesses that we lend to. I take a look at their books, take a look at their numbers, make sure that they're credit worthy. So I work for a big bank, so to speak. So I worked in commercial real estate for 4 years, worked 3 years for a developer, worked about half a year for a commercial loan analyst that we did commercial mortgages to. So just always in finance, man. And that's honestly, you guys, I'm not bragging or talking about myself. My career has been, all over the place. But ultimately, I finished with a finance degree. I've been investing since I was 18 years old, and I've worked in finance. All these other YouTubers that, play in the finance niche, I mean, 90% of them, they don't even know how to evaluate, credit, how to do anything. I mean, like, I'm not trying to talk bad about them. They're all good channels. But ultimately, they have no real-world financial experience. It's kind of like, I don't know. But whatever. I probably sound bitter right now, and I'm not. Nathan Grimard, there's a CNBC article that says that 1 out of 3 Americans has less than $5,000 saved up for retirement. What do I think about that? I think that they're typical Americans. They're people that consume more than they save. They're easily marketed to. They love to spend, live above their means. And guess what? Social Security is not going to bail you out anymore. Social Security is not going to exist when I'm in retirement. The baby boomers are going to exhaust that. Everyone knows that. So ultimately, those people are going to be eating dog food, and they're going to be a drain on society. And I hate to say that, but that's honestly the case. If you want to live for today and not save for tomorrow, you kind of get what you deserve, right? That's kind of like if you want to eat pizza and wings and, eat ice cream and not work out, you're probably going to be unhealthy. If you want to work out every day, go for a jog, stretch, do yoga, you're probably going to be more healthy. It's just how this world works. Whatever we're living in, whether it's a simulation or God or nature or whatever you want to use for that all-encompassing being, life is very simple. You get in what you put out, or you get out what you put in. Sorry, I'm like verbally dyslexic today. So I'm on my soapbox again, but that's a topic that I'm passionate about, and I'm sure you can tell. Simon, how you doing, buddy? Nice to see you, my friend. Nice to see you. Doug Whitaker, agree on Musk with the middle finger emoji. Doug, you crack me up, man. Simon says, Apple buying Tesla. Yeah, okay. Yeah, good one. Frankie Roberson, same here. Okay. Guiletta's Garage, I genuinely like this group. Excellent question, excellent host. Thank you, buddy. That's what I'm trying to create. I'm trying to create a nice community of people. They don't have to be like-minded. They can have completely different opinions than me or different opinions than people in the group, but I think that creates a healthy conversation and everyone gets along, knock on wood, and we actually all benefit and all raise each other up. Bob Pick, keep up the great work. Got pages, gotta go. Nice to see you, Bob. You're a legend. You're an inspiration. I hope to be like you in my later years. And I'm allowed to say that because I know that you don't take that stuff personally. So I appreciate you, buddy. Frankie says, I reside in Michigan. However, bump the weed. They need to lower the insurance. That is the highest in the nation. I'll be returning to Texas shortly. Can't afford to drive in this region. Yeah, I don't know much about Texas, but I know about the Midwest. I was born and raised here in Cleveland. And I mean, I love it here. It's the lowest cost of living, relatively speaking. So I don't know. Maybe you're focused on just too much on the insurance. you got to think about the rest of the cost of living. We have the lowest housing we get the best value. I mean, we live in the nicest houses and they're the cheapest houses, just because, the weather kind of sucks. But in Cleveland, we have all 4 major sports teams. We have beautiful park system. We have Lake Erie, which is a beautiful body of water. We have beaches. We have everything. We have everything here. If you can't be happy here, then you're the problem, in my opinion. Frankie says goodbye to Dr. Pick. Sales education. Good afternoon. I'm a bit late. How you doing, my friend? Nice to see you here. Thank you for joining. Frankie says you're definitely speaking the truth. You live by the sword, you die by the sword, right? Heaven and hell is the only shoelace away. Exactly. That's right. At the end of the day, guys, we're all adults. We all make choices. Obviously, you can spoil yourself some days, but you have to earn that spoiling, okay? So the reason, literally the only reason I work out is so I can eat the food that I want to eat and still, feel good about myself. I play soccer once or twice a week. I go to the gym once or twice a week. Sometimes I swim. Sometimes I go to the sauna, steam room. You got to take care of your body, you guys. Taking care of your body is just like taking care of yourself in retirement, your Roth IRA. You invest in yourself, you invest in your Roth IRA, and you reap the benefits later on in life. And guess what, you guys? I may sound like frugal or whatever. I'm not. I'm really not. It's just that I just plan. I know what I can afford and what I can't. I don't live above my means. And ultimately, I hate to say this. This sounds like typical millennial speak, but you only live once. YOLO, and it's true. I mean, you can't take this stuff with you guys. So just enjoy yourself while you're on Earth, but do it, reasonably. Don't overindulge. So this is the last thing I want to talk about before I leave you guys, and I appreciate all the feedback. I appreciate all the support. If you haven't checked out my stock market membership group, here's my weekly plug. I got to plug it, you guys. I'm putting in a lot of work. Ultimately, it's a membership group, and right now I have it at $19 a month, which is half off. I originally wanted to do it at $38. I figured I'd just promote it for a couple months at 50% off. I'm just being straight up with you guys. It's $19 a month. It's a lot of value. It's my own personal portfolio. And if you don't want to sign up for that, check out my free weekly stock picks. I try and send out a stock pick every week. So ultimately, this is the last thing I wanted to leave you guys with. Sectors that have been performing over the past couple of years. So you can see here that I like to look at a macro perspective. So let's take a look at a longer time frame. Let's take a look at the 5 and 10 years. You can see that IT over the past 10 years has absolutely dominated. It's up 526% overall. Same thing with consumer discretionary. However, the more consistent one that I think is going to do better overall, especially with what we're talking about health and obesity and all this stuff. I think healthcare is ultimately going to be the winner chicken dinner, in my opinion. Technology is great, but it's very growth oriented, boom bust. It's a roller coaster as to where I think healthcare is going to be a little bit more smooth. Obviously, you have consumer staples, which are very conservative, which has weathered a lot of storms. But for me, I like healthcare. That's just my opinion. So I'll give you guys a couple seconds to catch up because I am a little bit faster than the actual stream. What do you guys think about this? Just let me know in the chat here. Lord Everfall, YOLO. Hashtag YOLO. Hey, whatever, man. I mean, at the end of the day, you only live once. Enjoy yourselves. Eric Estrada, good morning, Marco. On a scale of 1 to 10, how possible do you think it is that we have a market crash in the next few weeks? So weeks is, that's a tight time frame. I don't know. I think Q1 is definitely going to be sideways. I think Q2 and on in 2019 is when you're going to start to see everything hit the fan. That's just my opinion. That's why I'm not really buying many stocks right now. I kind of want to sit on cash, and that's when I'm going to start buying things up. So this brings me to the conclusion of this Saturday live stream. Thank you so much, everyone, for joining me. I really appreciate the support. We had about 50 people, I believe, on this live stream at any given point, which is great. I know that on a Saturday at noon may not be the best time to do these, but at the end of the day, you guys, thank you so much for joining me. Have a prosperous day, a prosperous week. And go out, man. Go hit the gym. Go run a little bit. Go feel good about yourself if you're able to. If you're disabled, do what you can to feel good. And report back next week. Let me know what you did. I'm interested to hear about it. Thank you so much, everybody. Have a prosperous day.